All right, hello everyone. Sorry while I hold my nose here. And I don't even mean my nose hair, because that would be really gross, but my nose here. It's kind of weird, man. I used to always sneeze twice, and now when I sneeze 3 times. But anyway, let us take a look at the market, and let us just see what's going on real quick. Once again, the S&P kind of moves ahead. Like people keep asking me, like, how does this attempted assassination attempt on Trump affect the markets? I don't know, man. I suppose if you're a real big Trump fan, you could say the market's reacting positively because it seems like he's going to get elected. If you're a Biden supporter, you could say, well, the market's been going up for years anyway. I don't know. I think one of the main problems newer traders have is they get too caught up in the news. And I always say this: having an opinion is a dangerous thing for a trader because it will influence the way you think. In other words, if you tell all your trading friends and trading community, oh, the market's going to go up, the market's going to go up, the market's going to go up, and then all of a sudden there's like a clear signal or sign or whatever, something goes on somewhere that might push the market down, you might ignore it. And you might not even realize you're ignoring it. This is what we call confirmation bias. So in my experience, the best traders are the ones who can be agnostic, and it's hard to do. I mean, I'm not saying I can do it all the time. It's hard to do. It's fun to talk about, like, oh, I think the market's going to go up. I think the market's going to go down. But if you're a short-term trader, if you're a day trader or a short-term swing trader, you're almost better off if you just shut the news off and just let the charts tell you what to do. We're in a full-blown constitutional crisis now, right? It's like, Biden is dividing he's basically destroying the Democratic Party because he won't step aside, and a lot of the people, blah, 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 want him to, and then you got Trump and blah, blah, blah. This is a full-blown constitutional crisis. I don't know what's going to happen, and I'm not saying I'm glad it happened, but as someone who's into history and politics or whatever, it's pretty interesting. All right, so anyway, all that being said, the S&P looks healthy. Let's just look at a couple quick sectors here. All right, the market is made up of different sectors. There's 11 of them. Some of them are small: materials, utilities, real estate. They're all less than 2% of the market or 3% of the market. Of course, we look at them because we could still get trading ideas there, but the sectors that generally drive the market are the bigger ones. Obviously, tech is the biggest. Financials and healthcare kind of switch back and forth between which one is the biggest because they're kind of equal weighting. They're each around 15 or 12%. Consumer discretionary. All right. So let's take a quick look, because for a while tech was in the driver's seat, and then tech basically went neutral. And recently it's really been financials and healthcare that have been pushing things higher, and they're each really overbought. So we might be setting up for some kind of a tradable reversal. Markets don't go up forever. All right, so we're going to look at the technology sector. See what I mean? So this is the tech sector. This is XLK. This is an ETF that tracks the tech sector. These things, this is why you should just hang out with a stock market jobber and forget all this other stuff out there. We know, we talk about it all the time, that you get support at levels that were resistance before. Look at where the support has been over the last 4 days. Seriously, like the opening trade here was, I don't know, around 232.45. What's today's low trade? Where is it? 231.77. Now that might seem like a big difference, but where was the closing price? 233.44. So anyway, we got this sector that's worth trillions and trillions and trillions and trillions of dollars. And what happens on the chart? The chart principles prevail. When we had this big sell-off going on, a lot of my students are followers. I don't like the word follower because I'm not like a religious guy or anything. I'm a religious guy, but I don't run a cult over here. Although if I did, I'd probably make a lot more money than I do now. And I might get some good tax status too, right? All right, anyway. When we had this big sell-off, it's like, just think about this. You're trading XLK and you're like in this big sell-off and you're like, you know what? I want to buy XLK. Where should I buy it? Are you going to guess Well, you can, but that's a good way to lose money. Or are you going to let the market tell you what to do? That's the way to make money. Someone might say, you know what? I'll buy XLK if it gets to 230. I like 230. You're in some chat room. It's like, oh, blah, blah, blah. Whatever. That's a guess. Someone who lets the market tells them what to do, and someone who's like a seasoned trader who really knows how this stuff works would say, you know, this level around 232 here has been important resistance. So therefore, there's a good chance there's going to be support there. There are people who sold who thought they were all that, like my daughters would say, and you know, they think they were the next Steve Cohen or whatever. And then all of a sudden the market blasts higher, and a lot of them say, you know, I made a mistake. I want to buy my shares back, but I'm only going to do it if I can get them at the price I sold them at. So when the market finally gets back there, you get these remorseful sellers placing buy orders, and their buy orders create the support. It's that simple. You don't need to overthink it. If you can understand basic economics, supply and demand, you can understand charts. And if you could actually, let me add something to that. If you could disassociate yourself with all the news that they're talking about and all this stuff, like for example, you know what? Let me show you something that one of my students asked about, which I think is a really good example of what I'm babbling about now. All right. So yesterday, there was all this news commentary that, oh, you know, people are buying the dollar because of the Trump assassination attempt. I guess the thesis is Trump's going to win the presidency. It's going to be good for the dollar. Look at this chart. Now, if you did not know about the news and you didn't know that there was that potential assassination attempt, what would you say about this move? You're on a desert island. You don't have access to the news. You're looking at your chart. Would you think this was anything special here? No, of course not. But the media is ranting and raving. Oh, you know, blah, blah, blah. The dollar is strong because of this. The dollar is strong. The friggin' dollar index was up 17 basis points. That's nothing. That's nothing. That's like 17 cents on a $10 security. So as a trader, what I think is, oh, I don't care about the news. Look at this. We're getting close to a level where the dollar was support before. Clear support back here in April, clear support here in May, clear support here in June, and clear support now. You don't need to be a former hedge fund trader or a market guru to see that. There tends to be support at former support levels. And there's a reason for it. It's called seller's remorse. There are people who sold when the market was at support, and then all of a sudden they blast off higher, and they're like, oh, I made a mistake. If it ever gets back to my price, I'm going to buy my dollars back. So I think yesterday was a really good example of the kind of I don't want to say stupidity, but it is stupid. But a lot of the people in the media, you know, you got to realize they're journalists. They're not traders, you know, and they always need to have a story. And frankly, they don't even really understand the markets, right? I see so few people in the financial media that really get what's going on. I don't even pay attention to it anymore. And they were also saying, oh, Bitcoin is rallying because of the whole Trump thing. And it's like, okay, let's take a look at Bitcoin. All right, so this was a big move higher for Bitcoin, and I would agree with that. Okay, but is it because of the Trump thing, or is it because of, you know, the fact that Bitcoin traders are maybe more driven by this kind of stuff? I don't know. But let's just take a look back at Bitcoin. Here's yesterday's move. Okay, it was up 6.5%. Let's go look at this move. Up 7.6%. Did Donald Trump not get assassinated on the weekend before this? Let's look at this move. Up 7.7%. Did Donald Trump not get assassinated on the weekend before this? Let's look at this move. Up 9.7%. Did Donald Trump not get assassinated on the day before this? Let's look at this move. Up 8.3%. Let's look at this move. Up 9.5%. You get it. This is something that, you know, Bitcoin just makes moves like this. Is it because of what happened? I don't know. And you shouldn't either. Just watch the charts, man. It's really the best traders just let the market tell them what to do. They don't overthink it. All right, let me just look at a couple of quick more things here. We know our healthcare sector is really getting jacked up, way overbought. You know, this money that's coming out of tech is going into healthcare. It's also going into the financials. Both of these things are so jacked up. I firmly believe that over the next couple of days, there's going to be some opportunities on the downside here, buying puts or whatever. So anyway, yeah. Anyway, please check in tomorrow morning, and we'll go over this, and we'll try to come up with some ways we can profit from this market. Sometimes the market is boring. Sometimes it's better to just go fishing and hang out instead of forcing trades and over trading. But sometimes there's serious stuff going on in the markets, and that's where, as traders, we can make our money. And that's what's going on now. Financials are getting so jacked up, healthcare is getting so jacked up that I think the downside of those we'll find companies within those sectors to buy puts on. That's where the opportunities are going to be over the next week or two. Okay, thanks everyone. Sorry to ramble for so long, but I'll see you tomorrow.